Buonasera ragazzi, calling in from Sardinia, Italy for one last time on this European summer trip while we continue to watch the bear market in cryptocurrencies. But at the moment, there's a huge question about, is this move up on Bitcoin, this pump, a trap, or are we going to continue through? And of course, we have these extremely urgent, as always, in the crypto way, crypto trades that we'll look at in today's video. We've covered these on the channel. We're going to update them and look for opportunities for trades coming up if we continue in this bullish sense for Bitcoin. So we need to understand, is it a trap? And the second question we need to ask is, are these trades going to continue, and which ones are stronger? So the strong versus the weak. Of course, we want to try and make the most amount of profits. Having said that about profits, like and subscribe. But I want to play a game with it because I know it's really annoying and boring. If your portfolio is down more than 50% in this bear market, smash up the likes. And if you just want to help out the channel, because it does go a long way, smash up the likes as well. And of course, 3 out of 10 of you aren't subscribed. Hit that freaking subscribe button down below and follow along this journey. We've been doing extremely well here on the channel, looking at the rejection on Bitcoin, looking at the support levels, and then the trading ranges that have played out time and time again, and where this market, this Bitcoin bottom, is looking to end. So looking at the major cycles here as well. That's what we've been covering for many months now. And in terms of this shorter term move for Bitcoin, we've been covering this since that the whole time. But the major level we've been watching is 21,700, and Bitcoin right now is coming up to that level yet again. This was an extremely important level, which we covered based on many of the swings here. So we're looking at our Gann swing indicator. You can find a link to this in the video description. It's a premium tool for us. And the level is extremely important for the market because it has been rejected multiple times. So it is dancing to the beat of the market. Keep that in mind. So where we left off yesterday was the market breaking through 50%. This is on the daily swings here. If you like your candles, that is also good as well. Some red, some green. But let's get rid of some of that noise, because I always want to get rid of the noise in the market to be able to give us a clearer idea. Going up 1, 2, 3, 4. This is our 5th day up, but we're just starting to fall short again. And guess what? It's at that price range, 21,700. The market obviously broke above it previously, but the close, which is the most important part, which you can see nice and clear using the candles, the close is underneath it. The close again on a signal bar here was underneath it, which we looked at extremely strongly as a strong rejection point. And then the next day it closed again, and then of course we had those 3 solid days down, followed by this move here. So is this a trap? Well, I think we're going to find out in the next few days. We're getting very close to that time period that we talked about yesterday, looking at approximately 8 to 12 days for this entire move to play out. And the reason being is we're 1, 2, 3, 4, 5, 6, 7, 8, 9. We're about 9 days into this move now from that drop. And if we're to get that strong move, which we've looked at in terms of support and resistance and swings, I wouldn't want to see this come any further than about that 21,500. The 50% level is right there in front of your face, 20,691, so call it 20,700, and then we'd love to see a bounce up from that point. Otherwise, just a nice strong move through when the volume comes back into the market tomorrow on Monday, when the US starts trading again. So either of these moves are bullish in my books, a breakthrough and above and a move up, or even just a solid breakthrough on volume with a high close. So that's the beginning of the confirmation that this is not a short-term trap, and that we're going to see more of the money flow through into altcoins to then go on and trade altcoins, which leads me to a beautiful segue for the channel sponsor, Bybit. Link in the top of the video description, $4,450 of sign-up bonuses. Some people do wonder, is this even a good exchange? Well, I'm looking for exchanges that can support themselves during a bear market. Yes, they take fees, like all exchanges take fees. Their fees are not high whatsoever, extremely competitive across the board. But exchanges that don't take that many fees during bear markets are exchanges like Coinbase that don't have so much going on in terms of derivatives trading. Yes, Bybit does have derivatives trading, so that's leverage, margin. If you're going to trade that, of course, be extremely safe. Have a plan. Know where to put your stops and your targets. Don't get greedy, and we're going to look at those in the crypto trades. But I just want to mention this briefly because for the sake of Bybit, looking at these exchanges which people have been concerned about, crashing like Coinbase, which has been the FUD over the last few days, and they've taken away their affiliate programs of, $10 when you sign up, because their volumes have dropped. So they don't trade so much when the markets are down, because you can't really go short on those exchanges. You can't trade derivatives. But the likes of Binance and FTX, Kraken, KuCoin that have a derivatives market have that extra layer of protection. And nothing is 100% safe in cryptocurrencies, but they have that extra layer of protection because they are trading short. So they're making fees when the market goes down or up, as long as the market is moving. Say what you want about exchanges and manipulation and all that sort of stuff. I'm sure I'll see it in the comment section. Honestly, it doesn't really matter. You're going to have to use one. Pick whichever one you like. Bybit, 0.01% maker fees and 0.06. So you can see it's extremely competitive across here, and basically the lowest of the maker fees. Now, I don't use Deribit, so I don't have anything to say on them, but you look at the trading volume. There's nearly 10 billion here on Bybit, and they're 50% cheaper than something like MEXC. So look, pick your poison, go for gold. There's $4,450 of sign-up bonuses. Moving on, back to Bitcoin, we looked at why Bitcoin might not be a trap and where we could see that happen over the next 1 to probably 3 or 4 days. So is it a trap? I don't think so at this stage. And if I was wrong, well, if Bitcoin was to go down, then the weaker side would be to break under the 20,700 and then come back up and test it to the underside. That is weak. And also, obviously, just breaking through on volume is weak. And then, of course, taking out the swing bottoms all through here at 18,900 is weak. So there's multiple ways we can see when the market is weak, rather than just listening to some stupid headlines out in the news and following the herd and joining in kumbaya with everyone else and talking about just being hodlers all together. Don't worry, guys, we'll survive, etc. All right, I know you enjoyed that little rant from yesterday. I'm not about the kumbayas and everyone holding hands and joining forces in a hodlers party. We'll leave that to the Moon Boys and the guys who don't know what they're doing. But for us here, we're watching for the strength in the market, and we're watching for the weakness regardless of what all the news pieces are saying, because we know that there was a ton of fearful news with everything going on in the world, yet the market is not going down. The smart money is telling you something, and it looks like they are wanting to buy this market while the fear is at its most extreme. 150,000 Bitcoin should be getting flooded onto the market from Mt. Gox after 8 years. Interest rates, inflation, wars, everything else going on like that. Markets aren't crashing that hard. Okay, so smart money is saying something to us in the price chart, but the news is telling something else to the dumb money. Unfortunately, they're going to probably fall into the trap again. So we've looked at Bitcoin, we've looked at exchanges. What about cryptocurrencies? What are these urgent trades that we're looking at here? So total crypto market cap, this is total 3. So this is all the market caps minus Bitcoin and ETH. Let's look at some of these levels here. Do we still have room to run to the upside? The first target here is at about 400 billion. So there's not much in it between now and that first little target, about 4 or 5%. But if we move up to the 50% level, which I still have target 2 up there, that's got another 52% on it. So about a $580 billion market cap. And to this level, which is at number 3 at around 480 billion, that's about a 25% move up. So I've got 3 lower than 2, because I think if we're able to make it this far to 480 billion, I think we could possibly see the market run to that 580 billion, provided we don't put in another lower low here. So that gives us a bit of room to move to the upside. It can take some time. Look at where we are now from where this market crashed in May. We are 9 weeks on, which is essentially 2 months. Okay, so this could happen over the next couple of months. It can take some time, and I know people want it to happen now. Don't worry. Give it some time and watch if the market gets rejected at these levels and forms a higher low, bullish, or if we then put in a higher low, form a lower high, and then start to fall from that point. That's bearish, okay, so we'll come back down. Obviously, we'll follow up and look at some of the stronger trades versus the weaker trades. And that's what I want to check out right here. So trading tips, strong versus weak. Want to try and make more money by taking the strong stuff over the weak. And then the target, setting the targets, because the way I look at the market is it an easy time to make money or is it a hard time? It's an easy time, then I'm going to be greedy in my target setting. If it's a hard time, I'm going to be conservative in how I set my profit targets for these crypto trades, right? We're going to look at ETH, Sol, Matic, ADA, DOT, and then also a wildcard in here. ETH and Sol, Matic, they're the strong ones. ADA and DOT are the weak ones, and I'll show you why right now. So looking at ADA, looking at the weak first, they're essentially, we're just looking at this here, strong versus weak, greedy versus conservative. The overhead resistance levels are much closer for ADA and for DOT. Therefore, there's not as much room to run and grow and thrive in terms of the trade profits. I'm not looking at the fundamentals of the project. I don't give a shit about that right now. All the projects have lied to us. They're all the same as each other. None of them do what they say they do. We're just here to make the money on the trades, watching the charts, okay? They're all liars. We get that. They're all liars. Sorry if that offends you and whatever crypto bags you hold, okay? Moving on from your emotions, what are we looking at here? Okay, so DOT, you can see to the upside. Let's just look at some of these percentages. The percentages are still okay, 18% to the 50% level is about 24%. And then if we can break through this resistance here at $8.50 to $9, then I think we've got a reasonable time to run to about 1060, which gives us about a 47-ish% run. It's still under some resistance here at these highs, so it needs to break through that, and it has a little bit more work to do, so it's harder, but it does have the potential to move up there, first up to about 20%, then about, 48 or so percent, okay? ADA, again, it's got a lot of hard work to do ahead of it. There's a lot of resistance levels. You just look to the left of the chart and you can see all of the resistance levels, and I'm picking 50 cents here. You can see a top, more of these tops through these levels. They weren't able to close above. It had support and then broke under that level, so 50 cents is going to be important, and that's only about 10% away. Looking to the 50% level, that's about 19%, and if we can break that, then we can probably run to some of these highs at these levels, giving us about a 50%, potentially to this underside here, which is at about 75 cents to 78 cents. So that gives you a move to about 70% up. So there is the possibility for it to run a little bit harder, but like you could see with DOT, there's a lot of resistance in the background. Unlike something like Matic, okay? So you can see the clear difference here of something that is able to run free and roam and bring up all the gains like Matic, which we've looked at previously, and the market was able to break through. Look at the volume coming in here on which exchanges it's Binance. So there is a fair bit of volume coming in here, and the market is able to break through with volume, telling us that the buyers are stepping in, and more of those fence sitters and sellers and everyone else is moving into the market at the same time, which is what we want to get on when we move with momentum. So you can see all these tops. Market has broken out of those. The next level is still a reasonable distance away. It's about $1.03. So where this started from, it had a lot of percentages to move. If it went from the low to the high, 220%. We just need to chunk out in the middle. You don't need to make 220%. And of course, if you're trading on leverage, which have a plan, know what the frig you're doing as well. Okay, I'm not encouraging you to do that, but definitely have plans. If you are trading on leverage, then of course there's a lot to be made in that middle. And then you can see what happens on these breakouts. Look at this yellow line. We've looked at this before. The breakout, the volume, boom, away it goes. That's why it's easier to trade with momentum than try and pick any of these points, even though they're lower. Just trade on the momentum. It gives you those profits so much quicker. And from the low to that high point, 47%. From where we currently are to the 50% level, another 33%. If we're to break through that and look towards these lows, so you've got a low here, and here, that's at about $1.30. It's another 70-odd% away from the current price. It's not going to go straight up. At least the probability is not in its favor to go straight up, but it has, I think, a much easier time to reach those levels than something like DOT, which is still being suppressed. It's still being held down. ADA, still being held down. Matic, it is allowed to run free. Go with the freedom. Go with the movement of the market. It still might even have swings and hit resistance, but then hopefully find higher lows and then start to make its way a little bit higher. It's not going to run straight up is essentially all I'm saying here, but it has an easier time than the other two charts. We're going to look at Sol because it's on the verge. You can see that it's been suppressed like ADA and DOT. It's coming up to that 43 resistance. Call it manipulation, call it whatever the hell you want. It doesn't matter. When you make profits in your bank account or losses, they don't care. They don't care whether you called it manipulated money or resistance money. It's just money in your account. So, it's all semantics. Going up to that 50% level or the $43 resistance is only about 8 or so percent away. So keep that in mind. But this could turn out, could turn out like Matic. See all this resistance, 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 higher lows forming, higher low, higher low, higher low, big volume coming in. Solana, look at that, higher lows, higher lows. Are we about to see that again for this, for Solana, and maybe make a move up to any of these levels here, you know, at 45% away? Just a little bit easier. And if it is to break $59 and $60, then your next levels are about $80. So it's got quite a good ways to go. And in terms of percentages, you know, there's 100% from the current price to that level. Of course, wait for the breakouts for those entries. ETH is the last one. It hit that first target. We had target 1 sitting across here at around that 50% level, which was 1400. And you can see yesterday when it went on that pump after I posted the video, the market hit it, came back under. You can see the close. Look at the candles. Look at that close. It hit 50%, spot on, closed underneath. Now it looks like it's trying to set up, waiting for that volume to come back into the market when the US opens, close above the 1400, and it has a reasonable, easy way to move to around 1700. There's not much in the way for ETH to get to approximately 1700, give or take a little bit here, 23% up. Okay, look left on the chart. There's just not that much going on. There's a couple little lows here, but you can see a lot of support, and it gave way. So maybe we're going to come up into that zone between 14 and 17. And like I say, going back to this, greedy versus conservative, I'm much more on the conservative fence at this point rather than being greedy, because we're still in a bear market. So I'm not going to expect that we're going to get these massive runs like we did in the bull market. We're in a bear market, so I'm going to switch my plan to being conservative over being greedy. That's what I like the look of here, okay? So we've got a fair bit of room to move. So we've looked at how to set this up on the plans, you know, strong versus weak cryptos. You can start to see that on the chart so you can make more money. Greedy versus conservative. Don't get greedy, especially in a bear market, obviously my opinion. Again, so you can make more money than lose it. And onto that last one, the wild card, the one that everyone absolutely loves to hate, XRP. I don't care for the XRP army. I don't care about any of that stuff. Like I said, the profits in my bank account aren't going to, you know, they don't care whether it's part of the XRP army or not. They don't give it absolute shit. I just want to look at the chart here. So this is still being suppressed quite a lot. Call it manipulation. Like I said, I don't care. But if it's able to run, it has some good legs up. This is a small trading range that it might jump into between 38 cents and approximately 42 cents. So it's another small trading range. But if it's able to run, we're on a weekly chart here, it could move up to these lows somewhere around 51 cents. That's about a 46% away, or these lows are about 58% away at 55 cents. The 50% level at 60 cents is about 71% away. So there's some room to move here if it is allowed to run and the manipulators don't start forcing it back down with the SEC, yada, yada, yada. Whatever you want to call it there, you know, you've missed this analysis, that analysis. Honestly, doesn't matter. Does not matter, because we just need to follow the chart. And the chart will tell us what the buyers and the sellers are doing. The news does not. So the chart is telling us what the buyers and the sellers are doing. This looks quite nice here. Huge volume. I'm on Binance. On the weekly, this bar right here, or candle, this little red one, massive volume, and the market is now trending sideways. So it's stopped the bleed to the downside. The band-aid has been put over the wound, and it's now holding it together, just like this other band-aid was put on it here, and now we're just holding above the low of that bar. You can see that there in terms of price. That's a really key trading tape reading signal here. Look at the low on that at 33.23 cents. And at the moment this week is about to close in about 11 hours time, and it might even close above the low of that bar there. That is going to be a good signal. I will say that if that is able to close up there, then I think we have a lot more probability of moving up to these higher prices of 38 cents and then possibly getting into this little trading range before hopefully tackling those higher prices of around 60 cents for a trade here on XRP. Guys, like, subscribe if you had more than 50% drop on your portfolio. Of course, Bybit is down there as well, and the Gann swing indicator that I'm using. This week is our free newsletter, TIA newsletter, so the Investor Accelerator. Again, all the links are down below. It's free. Check it out. If you don't like it, you can always unsubscribe later. We're looking at Bitcoin, cryptos, and of course, being long-term investors, we're looking at the real estate cycle, which is the key to all of investing and the economic cycle. I know it sounds crazy from some guy sitting here in Sardinia in a tank top, but if you forget about real estate and the land cycle, you will miss the entire cycle, the entire economic cycle and what is going on in the world. Check out the links down below, free newsletter, and of course, Bybits and the GAN-SWING indicator. I'll catch you guys at the next video in a couple of days' time as I'm traveling tomorrow. So until then, have more fun to get more done. Peace out.